So last week we talked about it, and I talked about how, I was going to buy Airbnb stock. I was going to invest in Airbnb. And then Airbnb went public and DoorDash went public. Let's cover DoorDash first. DoorDash on its first day of trading saw over a return of 85%, going from a market cap of about $39 billion to about $72 billion. Apart from McDonald's and Starbucks, which were the only two companies that come to mind as ones that have a major market cap or in the food industry, DoorDash was now one of the largest, if not the largest, company in the food industry based on market value, not based on income or all these other things. It was larger than Yum Brands. If you don't know what Yum Brands is, Yum Brands owns KFC, Taco Bell, and Pizza Hut. Just think about that for a second. It was larger than Restaurant Brands International, which owns Popeyes, Burger King, and Tim Hortons, for all my Canadian folks out there. And also, it was larger than Darden Restaurants, which owns Red Lobster and Olive Garden. Just think about that. DoorDash, an app that barely makes over $300 million a year. Barely. If not for the pandemic, this thing would not have gone public. But when it went public, because right now the markets just don't make any sense, it was majorly large. In fact, my favorite restaurants, one of my favorite fast food restaurants, there are two, Zaxby's, Chipotle, Chick-fil-A. Right now, DoorDash, actually, I think it's come down a little bit, but it is still worth more than Chipotle. I don't understand. How did it reach such a valuation? It just blows my mind. But then Airbnb went public the very next day. And Airbnb looked at DoorDash and said, you only went up 85%? Dog, check this out. Airbnb came out of the gates and exploded, going from $68 a share to over $145. It actually hit $165 at one point. It went from a market cap of $47 billion to $100 billion. $100 billion. Literally, the CEO of Airbnb was being interviewed when the company went public, and they asked him, hey, about the stock price. They were like, oh, you guys opened the market at over this price point and you just exploded. What do you think about that? And he was like, well, I haven't seen those numbers, but it's, because the thing you have to remember about IPOs is the company no longer makes any more money off of the share or anything like that, because the way they make their money is after they have the agreement with banks, after they have the agreement with, hey, we're going to sell this number of shares at this price point, and every party agrees to it. Usually it's institutional investors. It's usually big, large banks and those kind of things that finance the deal. They get that money and they're able to do what they need to do for their company. They don't get any more of that money. And so to see that your company goes on the open market and then does way better than you guys projected for, it's kind of hurtful. It is kind of hurtful because you don't see any of those profits. The only people that see most of those profits ain't retail investors like you and I. It's institutional investors and large net worth individuals that are able to buy pre-IPO pricing at that $68 that it actually opened at. So it's just crazy to think about how the IPO market has been this year. As a matter of fact, I have a stat for y'all. In the year 2020, we've had 19 IPOs that have doubled in value this year. Doubled in value this year. Can you guess the number that we've had in the last 10 years combined? We've had 25 in the last 10 years. So from 2010 to 2019, we had 25 companies that went public and actually doubled in value. 10 to 25. And in 1 year, we've seen 19 companies. 19 companies. And yet people are saying this time is different. We haven't seen this valuation since the tech bubble. Since 1999, when the tech bubble bursted. We haven't seen valuations that have been this crazy. And people keep saying that this time is different, that Airbnb actually is making revenue, that DoorDash is actually making money, that DoorDash is an actual company with cash flow, that DoorDash actually has a model that works. The problem is, yes, it's a company. Yes, it's making money. Yes, they're not profitable and all that stuff. And yes, we see major growth potential for them in the future. However, it doesn't make the valuation any more crazy. We have to also remember that during that tech bubble bursting back in 1999, we had companies like eBay, we had companies like Amazon, we had companies like Microsoft, we had companies like Cisco, we had all these other companies were also there, and they had good models of a business. I mean, they weren't what they were today, but they were also part of that bubble. And so it wasn't like there weren't people who didn't believe in them as well. But the fact is the bubble still bursted, and they still had lost over 50% of what the original price was at, or whatever that price was in 1999. And so my main point to everybody is be careful. If you're investing any money right now, be very careful about picking single stocks. You're better off just investing in ETFs just for the time being and just kind of waiting to see. I mean, I don't know if we're in a bubble right now. I don't know if we're in an IPO bubble or a EV market bubble or a SPAC bubble or maybe even an ETF bubble, because everybody's just like, you know what, just buy into ETFs, just buy into ETFs, just buy into. I don't know any of these things. But what I do know is when I look at a chart or when I look at the history of the stock market, when everybody is a little bit too excited to make investments and everybody's a little bit too happy to buy into certain stocks and everybody's a little bit too happy to jump into the market. Like Warren Buffett said, when others are greedy, be fearful. So I just wanted to put that out there for every single one of us to be very careful with all of the IPOs that are going on right now.